Okay, hi everyone. Today we are going to talk about fraud and error and how these affect the work of professional accountants, particularly those in external audit. Now, we all know that professional accountants must keep an eye out for misstatements, particularly material misstatements. And so one gets to ask, what are these misstatements anyway? How do businesses get exposed to these said misstatements? Well, quite simply, misstatements can stem from either fraud, error, or non-compliance with laws and regulations. In the Philippine setting, fraud and error are covered by PSA 240 as redrafted in 2009, while non-compliance is covered in PSA 250. For this video, we are only going to focus on fraud and error. So, let's get started. What is the difference between fraud and error? Supposing you found an invoice with details that said 5 items at 1,000 pesos is 50,000 pesos. Is this fraud or error? Unfortunately, the answer is it depends. Depends on what, you ask? Well, it depends on intent. If the miscalculation was an honest mistake, it was an error. If it was done on purpose, ergo with intent, it is fraud. Even if we go to the textbook definitions of what fraud and error are, the idea of how intent divides the two is very apparent. Error is a mistake, while fraud always involves some kind of deception or lying in order to get away with something bad or illegal. Let's take a look at some examples of error. As you can see, key in each of these examples is the concept of a mistake being something that is done unintentionally. Because mistakes are unintentional, it is normally easier to spot them, as no measures have been taken to cover them up. Professional skepticism would require the auditor to conduct his examination with a questioning mind, especially since fraud can easily be mistaken for error, especially since intent is so difficult to establish. Take a look at these. As you can see, once intent is present, these are no longer errors but fraud. The thing is, it is almost always very difficult to establish intent. But knowing the two types of fraud might help. Let's take a look. The first type of fraud may be more familiar to you as this involves theft of assets. This is called misappropriation of assets, or quite simply employee fraud. Now be forewarned, it doesn't mean that only employees are capable of theft, because even management people can steal from the company. It is just named as employee fraud because this kind of fraud has been observed to be more rampant with employees. Notice that in misappropriation of assets, assets have actually been stolen from the company. It's also to be remembered that this type of fraud is often accompanied by false or misleading documents intended to hide the incidence of the theft. Take for instance the petty cash custodian who stole money from the funds and concealed it by making a bogus acknowledgement receipt or altering a petty cash voucher. Or the employee who steals inventory and getting away with it by writing it off as a defective item for disposal. Remember, fraud is deception. In order to not get caught, fraudsters have to cover their tracks. Now, let's take a look at the other type of fraud. This one is called fraudulent financial reporting, or management fraud. It is named as such because the nature of the fraud involves functions that are normally performed by members of management. Notice that this type of fraud does not necessarily entail a theft of a company's assets. Rather, it refers to the manipulation of the financial statements to make it appear better than it actually is. We have a term for this in accounting. This is what we call as window dressing. Take for instance the notorious fraud that happened in WorldCom, where instead of recording expenses, they recorded assets. Net income and net assets mostly improved, didn't it? No actual amount of cash or assets were stolen, but the financial statements were doctored to make it appear that the company's financial performance and condition were better than it actually is. Or imagine a company who has chosen not to recognize bad debts so that the current ratio complies with a loan covenant with the bank pertaining to current ratio. Or imagine intentionally tweaking the estimates used in calculating depreciation or switching from one depreciation method to another with the sole purpose of manipulating the amount of depreciation for the year to either increase or decrease income. The recording of ghost transactions, the non-recording of transactions, the list just goes on and on. Now, a better way to understand fraud is through the lens of the fraud triangle. I was thinking of talking about this myself, but then I found this amazing TED video that did a super great job of talking about the fraud triangle. I'm including the link to this video in the description box. So, as you can see, fraud can range from the simplest to the most sophisticated of things. It can be as mild as an employee stealing the company's stationery to something as wild as the CEO manipulating the financial statements to attract more investors. This can be quite overwhelming. However, remember that the auditor is primarily concerned with fraudulent acts that cause material misstatements in the financial statements. Now, let's talk responsibilities. You remember those charged with governance, right? To simplify, let's think of them as the board of directors, those in charge for setting and monitoring the overall direction of the company. And then, of course, there's management, those involved in the day-to-day operations of the business. Now, what could be their responsibilities when it comes to fraud and error? Well, it is management who is responsible for implementing internal control policies and procedures for the detection and prevention of fraud and error. Those charged with governance, on the other hand, ensures the integrity of the financial reporting process and that appropriate controls are in place. It is quite clear then that when we talk about the prevention and detection of fraud, it is management and those charged with governance who are responsible. But then, what about the external auditor? What are its responsibilities? To find out what, stay tuned as this will be the topic in our next video. Thank you so much for viewing. If you are a student currently enrolled in my class, please refer to your class representatives for any class activity relevant to this video. That's it for now. Have a great day, everyone.